Sony's PlayStation 5 price hike. Is this because of US tariffs? A short business check. In August 2025, Sony raised the US price of the PlayStation 5 by $50. At first glance, it looks like a simple gaming news, but underneath it's a powerful case study in economics, strategy, and consumer psychology. Tariffs and cost plus inflation. The US under Trump's second term imposed tariffs of up to 25% on Japanese and South Korean imports, including electronics. Add to that levies on Chinese-made components and lingering supply chain disruptions, and Sony faced rising production costs. This is cost plus inflation, when higher import costs push companies to raise prices to protect margins. Sony initially absorbed these expenses, but by 2025 the strain made it unsustainable. The extra cost had to be passed on to consumers. From penetration to profit optimization. When the PlayStation 5 launched, Sony used the penetration pricing, keeping prices low to quickly capture market share. Now with 60 million plus units sold and the console entering its maturity stage in the product lifecycle, Sony is pivoting toward profit maximization. With strong brand loyalty and limited substitutes, the company has the power to increase prices without major risk of losing customers. Porter's 5 forces in action. Buyer power, hardcore gamers have limited alternatives. Rivalry, Microsoft and Nintendo face similar cost pressures. And threat of entrance, very low in the premium console market. Translation, Sony can raise prices with relatively little competitive risk. Next, we move on to price elasticity and consumer behavior. Inelastic demand, hardcore gamers will pay more for exclusives and performance. Elastic demand, casual buyers and parents may hesitate, especially around holidays. Sony also benefits from the anchoring effect. By keeping prices stable for 5 years, consumers got used to a reference point. Breaking the anchor with a sudden $50 jump makes the change feel dramatic, even if the percentage increase is small. Value-based pricing. Sony isn't just charging more, it's reinforcing value. Exclusive titles like Ghost of Yotei, Legends, and GTA 5. And technical advantages like ray tracing, 4K graphics, and the DualSense controller. This is value-based pricing. Customers accept higher prices because they see greater benefit. The takeaway here is that the PlayStation 5 price hike isn't just about gaming. It's a real-world case study in macroeconomics, through tariffs and inflation, strategy, such as pricing shifts and market power, and consumer behavior, through elasticity and psychology. Sony's move shows how global politics and business strategy meet in your living